Hello, everyone, and welcome to RETCON. I hope you're having an awesome time so far. Our next speaker will be Omri. He is the Chief Operating Officer and co-founder at Obligo. Please join me in welcoming him to our virtual stage.
Thank you, Patrika. It's a pleasure to be here at RETCON. Thanks everyone who's listening in. And today, what I'd like to do is give a little bit of an educational pitch about what's been happening with security deposits in our space and why security deposits are going away. So security deposits in the residential space used to be super awesome. If I had a building with 100 units, $3,000 deposit each, I would have $300,000. I could use it for really positive purposes for my renters as cash flow to fix things around the building. I could use it for more nefarious purposes, like maybe financing my next building, or I could use it for extremely nefarious purposes, like buying myself a car. And while it's true I'm going to have to repay that deposit once the renter moves out, another renter is going to take their place and pay another deposit. So it's really the perfect Ponzi scheme. What I'm talking about here is, of course, ancient history, because as we know, today deposits are really not that hot. There's been a lot of regulatory changes that have made deposits less and less valuable over time. And one might say that they turned from an asset into a liability. I want to talk about the trends that are pushing deposits away. We've been using security deposits for millennia. Why is it that suddenly 2018, 2019, 2020, why now would suddenly we would want to remove deposits from the equation? What has changed? So the first thing that has changed is regulation. In the past, landlords and property managers could do whatever they want with the deposit. Today, the deposit needs to be kept in an escrow account, a segregated account, never commingled with your other funds. In some places, you need to open a specific sub-account for each and every renter. That means you have to adhere to KYC requirements on every renter and take W-8 or W-9 forms. It means you have to pay interest for that account. If you pay interest, the renter needs to pay income tax for that, right? So you got to provide them with a 1099 form. In some places, the deposit is limited to only 1 month. You're limited to return that deposit only in 14 days, creating a pretty substantial legal liability. There's things that you cannot make deductions for. Some states and municipalities even provide you with a depreciation schedule. What that means is that if the renter breaks a table, you cannot charge for the full amount of the table. You can only charge for that time frame that the renter lived in the apartment divided by the total assumed lifetime of an item such as a table. So all this admin burden, all of this accounting burden has really made those deposits a lot less valuable to the landlord and the property management company. The other trend that is pushing deposits away is just competition. In the past, there used to be a knowledge gap between renters and landlords, and renters didn't really know what is the right price of an apartment that they saw. And frankly, landlords didn't either. They didn't really know how to do comp analysis very well. Today, with tools like Trulia and Zillow and StreetEasy and Apartments.com, a renter can make a very narrow search for the exact geography and amenities that they want, and they get a short list with a couple of apartments, and they can reliably compare prices. They can even see apartments that are no longer in the market. So that makes pricing very efficient. The renter is very smart about recognizing what is a good or a bad deal. And the landlords and property managers and leasing brokers have equally become very smart at establishing that pricing. We've achieved a situation where the pricing is very efficient. As the pricing become more and more efficient, people start to put more attention into things like, what is the worth of a gym in the building? What is the worth of a rooftop on the building? And invariably, eventually, you start asking the question, actually, what is the worth of a deposit-free lease, a deposit-free listing? Surely that's more attractive to renters, but by how much? And can I try to make my unit more attractive by not requiring a security deposit? It is this trend, maybe most of all, that has caused a lot of landlords around the country to first reduce deposits below the 1 month limit and later even eliminate them. So it looks pretty clear, right? There's advantages. We're going to reduce our admin and the regulatory burden, and we're going to be more competitive in the marketplace. So clearly, we should just eliminate deposits, right? Well, we need to stop and remember why we took deposits in the first place. And some of the reasons here are trivial, some are not as trivial as the others. When I take a deposit, I want to make sure that I get a quality renter. And the quality renter should be able to afford paying that down payment of the security deposit. If you cannot afford to pay the deposit, maybe you shouldn't live here. The second part here is renter accountability. When there's a deposit, the renter has skin in the game. When they have skin in the game, they're going to take better care of the apartment, and we're going to end up with less headaches, first of all, and also less damages, less things to fix, less debt. The third part, which is maybe the most trivial part, is we want to de-risk our bad debt. In case that the renter owes us money at the end, we want to just grab that from the deposit. We don't want there to be debt that we have to collect that we turn to bad debt and into write-offs. So the question isn't, are there advantages to eliminating deposits? Of course they are. They are evident. The question is, can we stop taking deposits without sacrificing these three items that I just listed here? It turns out that this problem was solved very effectively, essentially perfectly, decades ago for the hotel and car rental industry of all places. They solved it, and they didn't solve it with insurance. They actually solved it with credit and payment technology. When I check into a hotel, I don't give them a security deposit. I give them a credit card. They swipe that card, and what that does is it gives the hotel the authority to charge me as a guest for up to a limited amount. Now, this process is instant and it looks very simple, but it actually has key components that really correlate well to what I just spoke about. First of all, the very fact that I have a credit card and that I have a sufficient limit is already a very good sign that I'm a high quality guest, because the credit company would not have allocated that credit to me in the first place if I wasn't. About accountability, it's very, very clear, right? The hotel can charge me. They tell me as such when I give them the card that they will be pre-authorized to charge me. It's very clear for me as a renter. And if I don't, and if the hotel charges and I don't pay back the credit company, it's just any other loan, and I'm going to be accountable for that. And then the last part is the de-risking. The credit company is going to pay out first to the hotel if there's an issue. And then as far as the hotel is concerned, the problem is done. Now it is the credit company's concern to successfully collect from the renter. And from that respect, it does actually de-risk the hotel from bad debt. Looks like a pretty good model. And what we've done at Obligo, the company that I co-founded, is we've tried to take that model and modify it to fit long-term leasing. So Obligo does these three exact things again. We make sure that the renter is of high quality. Again, they didn't prove that they are financially qualified by paying the deposit. They're not going to pay the deposit, but they do need to prove that financial liquidity. The way we do that is we connect to their bank account using open banking technology. We can see the transaction history in that account, and we can make a determination about the financial capability of the renter before we approve them to be a deposit-free renter. The second part is renter accountability, and here we solve that with the pre-authorization. The landlord is going to be pre-authorized to charge the renter's Obligo account, and then the renter is also pre-authorizing Obligo to charge their bank account directly and also their credit card. So by doing that, we maintain that accountability, and we are super transparent about that when we explain the product to our renters. The last bit is de-risking bad debt. Obligo, when there's a charge against the renter at the end of the lease, Obligo pays the landlord first, and now it is essentially a loan. And then the renter typically would pay that back to Obligo in installments, but from the landlord's perspective, the problem is already solved. So I think any good solution for the deposit problem needs to cover these three kind of fronts. And in fact, I'm going to invite you guys because, I think our solution is a good solution, but it is by no means the only solution, and it is not necessarily the best solution. What I am going to say is that any solution that you guys build for yourself need to take these three things into consideration. Are you protected? Are you de-risking yourself? Are you protecting yourself against potentially a spike in bad debt? Are you making sure this should say renter quality. Are you sure that the renters are high quality when they don't pay you deposits? And do you have a good mechanism to make sure that they're accountable? If you can do all these things, absolutely, you should go ahead and do it yourself. If you have a very good screening process, you know to a high degree of confidence who are the risky renters and who are the good renters, that's great. Don't take deposits from the very best ones. Do take deposits from the bad ones, or just reject them outright. If you have a very good collection operation and you recover 50, 60, 70% of debt owed at the end of the lease, by all means, you can go ahead and do that. And if you're large enough, you should be able to de-risk yourself by just planning your cash flow, right? If you're a large landlord, and I don't mean super large, I mean over 200 units, you should have a pretty good grasp of your own cash flow. You know how much bad debt you write off every year, and you should be able to plan your cash flow that way so that you won't be susceptible to any sudden spike in bad debt. If you're smaller, absolutely, I would recommend taking either Obligo or an insurance company. And there's plenty of insurance companies in our space as well. If you do take an insurance company, which and there's nothing wrong with that, I would advise that you also make sure when you assemble your solution that you have a solution to take care of the renter quality, again on this side, and the renter accountability, meaning collection in this case. Because what you don't want is a solution that's going to allow bad apples into your apartments. You do want to make sure that they're financially qualified to rent. And if they're paying for insurance, you need to make sure that you know their income, that you verify their balance, etc. Obligo is at the intersection of all these things. So yes, we provide the de-risking, but also these capabilities. And if you're an extremely large landlord and you truly don't need any help de-risking yourself, because again, you know what you write off every year, we also have an option to use what we call Obligo Connect, which means that we're going to take care of the screening part. We're going to see if the renters are good or bad, and we're going to try and forecast how much essentially bad debt is going to happen for every renter. And we're going to help with that collection automation after the end of the lease, but we don't necessarily need to de-risk the landlord if that's not something that they want to pay for. With that, that's basically the pitch. You need to take care of renter quality, you need to take care of renter accountability, and you may need to make sure that you de-risk yourself from bad debt. Those are essentially the components needed to eliminate deposits and really capture that upside of higher demand for your units. Thank you, everyone. And it's been an absolute pleasure to be here.
Awesome. Thank you so much for sharing with us, and a big virtual round of applause. And also, congratulations on your latest round of funding. That's very exciting.
Thank you so much. Yeah, it was just announced a couple of days ago. We did raise a $15.5 million Series A, and we're very, very, very excited to take our technology forward and expand our partnerships. Thank you so much.
Awesome. Well, congratulations. And thank you to our attendees. If you're heading to your next session, go ahead and check out your agenda page or take some time to do some virtual networking with your peers. Thanks so much, and we'll see you around.